Good morning, everyone. This is Daily Trading Analysis with the weekly recap, the last week of the month of May. And this week has been unbelievable. We started the week with a Memorial Day, with a short week. And oh boy, the rest of the week has been incredible. And on Friday, it happened something that I've not seen since, I would say, years. And when month ends, sometimes we see inflows, outflows that are outside of the regular basis. And that's what we saw on Friday. On Friday and Thursday, we saw continuation to the downside. And then we see inflows, unbelievable inflows into June. So be prepared, because how we ended this week, it's one sign that June next week is going to be, I think, full of opportunities. As always in these videos, we are going to review the economic data, and we are starting with Tuesday S&P Home Price Index, the Case-Shiller, and this is bad news because 7.4% is still year-over-year home prices, and consumer confidence gave a little bit of breath, 102. We were expecting a decrease from 97 to 96, but we got 102. So this is a big check in the right direction for markets, because consumer confidence and their spending is key for growth on the market. What else? Wednesday, nothing. More Feds talking. And they're saying basically the same. We saw on Wednesday the start of the Wednesday and Thursday sell-off. And this is because Bostic and Williams were saying negative things regarding that they won't see more months, more continuous data in the proper direction. They don't want to see one reading of good data. They want to see continuation in the progress of inflation. And they are still seeing higher for longer, and if any, cuts a day later of this year. So Wednesday was the start of the sell-off, and on Thursday and Friday, we saw the really big numbers. GDP growth rate and GDP price index. The growth rate, this is an estimate for Q1, the second estimate, and it's still pointing towards less growth, 1.3 instead of the 3.4 of the previous one, but was as expected. The market is expecting this. The price index for the second estimate on Q1, it's bad news. So this is basically a check. This is a big miss, 3.1% in the GDP price index, coming from the 1.7, again as expected, but it's not the proper direction for the price index. And look at this, corporate profits, the preliminary for Q1, it's in the negative. So I think this is also a miss. Thursday was full of bad news. Initial jobless claims came a little bit higher than the 216. We were expecting 218. But look at this, wholesale inventories in the positive, more inventories, and pending home sales. Look at this, plummeting. I think this is a good news, because both sales year over year on month over month on pending home sales need to cool down. This is one of the things that the Fed want to happen. But I think the GDP basically tanked the market. Both corporate profits and GDP price index was really, really bad. And then on Friday, we have the big number. Core PCE price index, it was basically, as expected, a little bit lower in this case, 0.3%, and on the previous one, and 0.2, so a little bit of decrease. But the personal income and the personal spending are really, really low. We are coming from 0.3 and 0.7 to 0.2 and 0.3. Look at this spending on 0.2, because it was revised down from 0.7. So this personal spending, I think, was one of the things that happened during late afternoon in Friday. We are seeing less spending, and less spending is good for the prices and good for the inflation. On the regular headline inflation, PCE is showing the same, no progress. So we are flat. So no surprises, no nothing. The big surprise though, and I think this fueled the market to the downside, is the Chicago PMI for May came from 37 to 35. So we saw basically flat on these readings. This is nothing. I think this is no big surprise either to the upside and to the downside, but we saw a big decrease on the personal spending and the Chicago PMI plummeting. The market dumped and then recovered with a huge V reversal that is showing something very, very interesting. Bear with me a little bit. We are going to see one of the things that I always check, the MOC. The MOC is the market on close. How are the positions leaning towards these markets? And look at these numbers, because I've not seen these huge numbers in a long time. The S&P got 4.4 billion to the upside. The Nasdaq got 1.9, basically 2 billion to the upside. The Dow, 2.1 billion to the upside, and specifically the Mag-7, it's showing 1.3 billion to the upside, with Microsoft and Apple having a huge inflow. And Nvidia, oh boy, it's pushing. So this is facts, and facts is that money is pouring into the market, and we are going to see huge moves in June. In terms of interest rates, we are seeing a change in September due to Chicago PMI and personal spending. We are coming from no cut to cut with 47%. It's not huge probabilities, but we are seeing a change. We are most probably going to see no change, no cuts in the summer, but in September, we are starting to see an increase, but only one cut, only one cut. So with that said, let's go to the fun part. Let's go to the charts, because this is going to be, wow, a hell of a ride, because this is the monthly chart. We ended the month 5.8%, the best month of the Nasdaq since November last year. So 5.8, it's basically a bullish engulfing candle of last April. We were expecting some kind of pullback on the monthly to really then gather more participation, more money into some kind of breakout. Yes, that was I was expecting, and a lot of people were expecting. But this market is quite resilient. We are seeing huge push, and this monthly candle was looking pretty bad on Thursday. So remember that this is the monthly chart. This is big investors, big hedge funds, big banks time frame, preferred time frame. On the weekly, we can see how the money was entering the market and was buying the dip like crazy. We were on this fair value gap, and they bought everything towards the end of the month. On the daily, we are seeing, look at these guys. This is a pretty damn bullish candle. This is insane, because the kind of sell-off that we got and how we reversed on Friday, that doesn't happen every time. That's quite difficult to see. And we have to analyze this to be prepared for next week, because I think the train is starting to go. Now, in terms of volume, let's see how we are dealing on this, because basically, remember that I told you we are below point of control. We are below this big node, and there's a huge void. And the second point, it's towards 18,300. And we didn't go there, but we had a big zone that I was watching that was pretty critical to me. And when you have this kind of void in which there was no participation, you can have these kind of moves either to the downside or to the upside. So on the 4-hour time frame, we are seeing this perfectly, in which the volume it's just gone. We just went from volume to volume with a lot of nonsense. But this is what market does. This is balance. The market was pretty damn efficient in filling this void and basically trying to gather as much auction to the downside and to the upside as possible. So let's start with the 30-minute chart, because I think everyone was watching this week that we were lower high, lower high, lower high, lower high. I mean, we were clearly in a bearish pattern. And if we go to the 1 minute, right at the open, we tried to go higher on the numbers of the PCE, but then we started dumping and dumping and dumping and dumping. And let me just show you how we dumped. Let me just put here, down here. This is how it looked like at noon. This was a huge number of 5-minute candles into the red. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 red candles on 5 minutes. This is insane. And look at this. We were so negated. Everyone was watching to buy the dip. And the shorts were saying, on the first sign of strength, I'm going to bail out. We were at 15 on the RSI. We were so oversold that I was expecting some kind of move. I tried to buy the dip at the first sign of, let me just explain you how I tried to find these bottoms. So as you can see, on mid-May, we got this fair value gap on the 30-minute chart, and we got this pivot and this pivot. So what I do is basically draw these two lines, and in the middle of the fair value gap, I try to find in this zone the mid-range for this inefficiency. So that's what was this imbalance. So the first imbalance here, we try to consolidate and then we push. So I was watching this fair value gap, and I had one order here with the stop down there, and I just wanted a scalp. This is, you know me, this is how I trade. This is the kind of setup that I trade. In correlation with other markets, Microsoft was starting to see signs of relative consolidation, and I was expecting at least this kind of move. And that's what I was waiting for on a Friday afternoon. But I didn't get filled, and we continue lower and lower and lower. And I was watching, come on, market, you can do it as setup. This was an inverse that I was watching, perhaps some kind of manipulation to the downside, and then going through to take here the position. And look at what happened. I got a second zone of consolidation down here. The same thing. This was a pivot, zone, and 50% of that zone. So that's what I was watching on the 1 minute. We never went there. I had an order right there and right there. 2 orders at 18,200s, low 200s. But look at what the market started to see. I started to see some kind of imbalances. The first time that we saw that. And the 45 EMA was trying to take the price action and come higher. We were oversold. We tried one time. We had an inverse. And now we have a move lower and a consolidation, and then push into that. So you know my setup. When we tap and we hold the fair value gap, entry, stop, and target one of the pivots, whatever. In this case, it's super difficult to just pick a pivot because there's plenty of them. Perhaps this was the best one, but I just wanted a scalp. I just wanted to take advantage of this oversold Nasdaq to see what we can get. And it was a this one was a 2 risk reward ratio. This was better, 3.67 for just 60 points. 60 points on this move. It's just nothing. Look at this move to the downside. So I just wanted some kind of opportunity, and wow, because we not only got this 1,200 bucks, we just pulled back a bit. Oops, we pulled back a bit, we tried to consolidate, and then we held the second fair value gap, and we started to see higher lows and higher highs. And look at the 45 EMA. This was a pretty damn huge move. Huge move in terms of what the heck. This is insane, because everything was perhaps a little bit okay at 8, 9 p.m. But the squeeze and the amount of money that was inflow into the last hour, it's insane. And the Nasdaq pretty much didn't get to do a high of day. Look at the ES. This is the ES. ES was screaming squeeze. Look at this, guys. Since 9:40 to 10, when it really closed at 4, from 3:30 to 4, was a squeeze after squeeze after squeeze. And if we check the Dow, look at this. Look at the squeeze on the Dow. Insane. This was high of day. And look at this move. Look at the daily on the Dow. We were super oversold. And on the last half an hour, we just got, let me just check real quick. We got 1% in the last half an hour. So, you know, this is something that I've not seen this year for sure. And last year, this happened very few times. So let me check individually what kind of performance did we get on the Magnificen-7. Apple did the same, squeeze. Remember the market on close on Apple and Microsoft, billions of dollars, and also Nvidia. Apple, same squeeze. The daily, it's putting pressure to the upside. Microsoft, look at this candle. Thursday was on software. It was a hell for them. And Microsoft is now putting a big squeeze, a big buy the dip opportunity. Look at this squeeze. Tesla, nothing. Amazon, a little bit, but minus 1.6. Look at Nvidia. Nvidia was not showing a lot. It was Apple and Microsoft which were basically squeezing everyone. I just want to put this pivot in here. So Meta, it's also showing signs of bullishness, but look at Apple. Apple, it's strongly pushing higher, and Microsoft was the real big reason, and how the markets are really putting a lot of this into them. So remember, let me go to that again. 4.5 billion on the S&P on close, 2 billion on the Nasdaq, with Nvidia and Microsoft being, and Apple being the big ones. So I think next week is going to be pretty much a continuation with this. We need to see continuation, and how we are seeing continuation. Where the first thing we need to check is the dollar. Dollar, it's just in the middle of the range. Nothing. We need to see if dollar wants to just, I have this zone We are ranging in this, so we need to see the dollar take peak direction. The yields, though, look at the yields. The yields were spiking higher at 5% the 2-year, and now we are at 4.87 with a minus 1% on Friday. So this pullback on yields was one of the reasons why equities were so bullish at the close. Big positions were out for the month, and the 10-year it's also showing the same. So we were trying to push for 4.7, the top of this range, and we are now retracing for 4.5 with a minus 1% into the in Friday. So treasuries are also pushing higher. This is obviously good for bonds market. And Russell was also pushing higher. Banks were all in the green. So the sentiment was really there. How was breadth? Breadth was really, really good. The RSP took my 1.30 in the green. We are ranging here, doing a higher high, a higher low, and a lower high. We are ranging, and look at the momentum. Pick up on the 20, pick up on the 50, and pick up on the 200. So there was momentum, 70% increase on the percentage of stocks above the 20 moving average. That's pretty good on the S&P, on the RSP. So what is the forecast? We have to really take what happened into account. This daily, let's just start to clean this, because what happened was really, really something that we have to analyze. And what is best to do is just take what happened with a lot of detail. So we have this blue dot line is the last week low, and last week high was the all-time highs. So with that in mind, let's go to the 30-minute and start to see what happened. We have a series of lower highs. This is quite clear. And I'm just going to draw this. I don't typically do this, but I'm just going to do it because I think this is just the trend that needs to continuate. So some kind of move like this could be awesome. Targets, it's as always the liquidity that we are targeting above. I have a lot of them. We have 1 hour and 30-minute fair value gaps in here, inverse. So this is the move in general that we want to see. Now, how we can jump on this? First, the daily is showing that the daily imbalance is holding. And we have this point of control at 18,755. So the 4 hour, it's showing this zone as a probable zone of resistance if we continue higher. The target overall for next week is this for me. There will be a lot of shorts up here. And we have also a pivot on the 4 hour around 787. So the 1 hour, it's also showing 755. Let me just check. It was 750. It's on the 4 hour, and on this it's 755. Okay, so 755 is basically around this zone. So we have this liquidity as probability, high probability, and we start to, I don't know if we are going to check, we are going to see a pullback, because all this price action was covered with. So I don't know if we are going to see a pullback. In case we need to see that pullback, in case we want to jump on a pullback, I mean, this first inverse is looking pretty good. The inverse, it's something I would like to see tested. So this is on a 30-minute, and on lower time frames, on the 15-minute, I don't know if we are going to see that. So let me just put the 50% retracement. That is going to be 474. I don't want, the thing is that I don't want to enter again too much of this. I just want to squeeze. I want a direct move. I don't want to test again this imbalance. And in this price action, what I'm trying to say is that this price action was inefficiencies taking advantage of the daily fair value gap. And now we have action to the upside. So all this, it's already passed. I don't want price action to test this again. If we test this, I don't know what's happening, but I don't want this. For me, the bull case would be a little bit of pullback and then higher. Because if we take the, obviously the 50% retracement on the big one was around 500. And on the other way around, the 50% retracement would be super low. The golden pocket would be super low and 50 super low either. I'm going to keep this, but I don't want the, I mean, there's here, it would be a nice, if we had a chart like this, I would just wait for some kind of pullback into discount, into the 50% retracement and the fair value gap. But again, we are coming from this huge V reversal. I don't know if we are going to see a pullback. I don't know, guys. But I'm ready to jump into the train in a more aggressive way than usual because of this V reversal. So where on the 15, there's also here, I mean, I don't know, guys. We have also this pivot. So if we go late to the party, this might be something. But let's see what happens. If we retrace a little bit more into below 500, perhaps 500, let me just grab that. 500 is around here. So 500 would be interesting to see. It would be not ideal, but it would be some kind of pullback. So let me just go to the 5 minute to see if 500 was, I mean, it was nothing. It was just straight up. Straight up. Well, I'm going to just tag 500. And nothing else. I mean, it's going to be super difficult. It's going to be super difficult. So perhaps we are holding this zone and we are seeing this. So either way, I'm very bullish for next week. We saw breadth momentum. We saw a huge V reversal of more than 300 points in 2 hours. So this is telling you that they are bullish. They are putting money, billions of money into the S&P and the Nasdaq and Apple and Microsoft. And this move is going to be huge. I wouldn't be surprised if we just go through the week, we go and go and go and go and test all-time highs. I'm pretty bullish. I'm that bullish. So this is my plan for next week. It's going to be difficult to jump on this trend. I have my requirements. If we go below here, I'm not interested again until I saw price action again, reclaiming 500. That's critical. But what I'm trying to tell you is that I think at some extent, at most, we are going to test 500 and we are going to break this downward pattern towards, I mean, let me just tell you, I want to see some kind of pullback into the 500, then push, test, push the high of day, the high of pre-market, and then push, and then let's see what happens in here. I think 700 is going to happen on Monday. And the next liquidity at 787 it's in between a zone for which 500 is the point of control. So this is the plan, guys. Be careful with this zone here on the point of control on the daily time frame because there's volume here. We have a lot of shorts here. But this is my plan. Let's see how we can take advantage of this bullishness for next week. Do your due diligence this weekend. Analyze, make your plan. This is my plan. I'm sharing it with you. I'm being transparent as always. I'm super bullish. You have to take what happened on Friday into account because that's a huge move. And it's supported by technicals and by fundamentals. So I think this is something that can turn into all-time highs next week. So there's your opportunity. You have to just have discipline, patience, a plan, and risk management. Those are key. And that's all from my side. As always, thank you for your time. If you found these weekly recaps videos useful, please give it a like, subscribe to the channel. I upload videos like this weekly recap every Saturday for a weekly review of everything from fundamental to technicals to analyzing other markets, the Magnificen-7. I mean, I'm covering everything you need to know from my point of view for you to be able to take these opportunities. So if you want to support the channel, welcome. And also Monday through Friday, I upload videos for market recap, market forecasts, and market reviews. So every day you have something from me. Every day you have something to just review and see how the experienced peoples are seeing these markets and are trading these markets. So thank you for the support. And I think Friday was pretty awesome. If you got destroyed, don't worry. Monday will be another day. If you were super bullish at the end of the day and you took nice gains, congratulations, because you were super patient as me, and those opportunities are really key sometimes. So stay safe, have a nice weekend, and see you on Monday.